Joining us from CommSec now is Tom Piotrowski. Good morning to you, Tom. I think, are you, along with everyone else, nervously watching the oil price this week?
Kenny, you're absolutely spot on. The energy landscape is where a lot of attention is being focused for a variety of reasons. The response as far as global financial markets have been concerned is that you have seen stocks move lower. You've seen a defensive move into gold, and as you would expect under these circumstances, with the extent of supply from the Middle East being in the order of around 30% of the world's oil supply coming from that jurisdiction, concern about energy security. So to that end, you've seen oil prices surge by the biggest amount in about 3 years. They're up by about 7% where West Texas Intermediate crude oil is concerned. So, from a distance, this impacts Australia. You would expect that prices at the pump in the near term would be up by more than 10% under these circumstances if those prices were to be sustained. And that's really the rub for economies around the world, is that at a time when it appeared as though inflation had been subdued by central banks, you're now visited by the prospect of headline inflation being boosted once again, and that means that any ambitions that central banks have about potentially cutting interest rates might be stymied by this interference. So where stocks are concerned, you saw Wall Street down sharply, but it was an orderly decline, Kenny. So that's the sort of thing that you look for under these circumstances, whether or not you're getting unhinged price action or whether or not it is a predictable response under the circumstances. The S&P 500 finished down by 1.2%. A measure that we look at carefully under these circumstances is the VIX. So this is the way that traders are taking out insurance through things like the options market. This is called the fear index, and it was around 22 on Friday. Any level above 20 is an indication that the concerns of investors are more acute. But to put it into context, the days after the Liberation Day tariffs were announced, we saw this measure around 60. So we're a universe away from that. So there seems to be an order within the concern that we're seeing at the moment. That's an important outcome. We're just waiting for the US futures to kick off. So in after hours trade, that'll give us a sense of how Northern Hemisphere investors have metabolized the most recent developments over the weekend. At this stage, the futures are pointing to a decline of only 0.25% for the ASX 200, but that will turn around what we see in these futures markets. But you would expect gold and oil producers to be well supported in today's trade.
Okay, Tom, we'll chat to you soon. Thank you.